Have you noticed how the real estate market is changing right before our eyes? For the first time in 12 years, the number of sellers has surpassed the number of buyers. This is driving prices down and creating a unique opportunity for those looking to invest or finally buy their own home. But be careful. There are factors that could reverse this trend. Leave a like, comment, and share this video to help more people understand what's going on. And of course, subscribe to the channel so you don't miss out on upcoming tips. Changes in the real estate market, 2025. For the past 12 years, we've seen the real estate market boom like never before. Prices were hitting record highs, and buyers were competing for every square foot available. But now, in 2025, the landscape has completely shifted. For the first time since 2013, there are more sellers than buyers. This is creating a real turning point. This shift is challenging everyone's expectations, even economists. According to Redfin reports, home listings increased by 12% in the first half of 2025, marking the biggest rise since 2010. This means there are more homes for sale than at any time in the past decade. Zillow data shows that the average home price in the U.S. fell by 2.4% in the first half of 2025. In New York, for example, apartments that used to sell for $900,000 are now listed for $850,000 or less. In cities like Austin, Texas, the drop has been even bigger. Homes that used to sell for $600,000 are now going for $550,000 or less. The rental market is feeling the impact too. In cities like Miami, the average rent for a two-bedroom apartment dropped from $3,000 to $2,700 per month in just 6 months. This shows how the balance of supply and demand is affecting not just those looking to buy, but also those looking to rent. This is a change that impacts entire families, investors, and even retirees who are counting on rising home values to boost their income. And why is this happening? Part of it comes from the monetary tightening in recent years, which pushed interest rates higher to fight inflation. But there's more to the story. Factors that could reverse the trend. Despite this historic shift in the real estate market, there are powerful factors that could turn things around. The first one, interest rates. They're like a market thermometer, deciding who can and who can't play the game. When rates drop, more people can access credit, which boosts demand and supports prices. When rates go up, like we've seen in recent years, everything gets more expensive, and many people are forced to wait or give up on buying. The Federal Reserve recently hinted that it might start cutting interest rates if the economy shows signs of slowing down. This has happened before. In 2008, during the financial crisis, rates were slashed dramatically to stimulate the market. Today, with mortgage rates around 6.12%, many buyers are waiting to see if they'll come down. And why do mortgage rates matter so much? Because they directly impact how affordable a home is. For every 1% drop in interest rates, buyers' purchasing power goes up significantly. It's like suddenly being able to buy a more expensive home with the same income, or getting some much-needed relief for your wallet. There's also a political angle that could speed up these rate cuts. Former President Trump, in his campaign to return to the White House, has been publicly pressuring the Federal Reserve to lower rates. That raises the chances of cuts as soon as 2025 or 2026. But remember, interest rates are only part of the puzzle. The market also depends on buyer confidence and how the economy performs in the coming months. Uncertainty about the future is keeping a lot of people in wait-and-see mode. How prices and mortgage payments are evolving. To really understand the impact of these changes, let's look at the numbers. These numbers tell a story beyond the charts. They show how people's lives have changed. In 2020, the average home price in the U.S. was $387,000. The mortgage rate was 3.4%, making for an average monthly payment of about $1,373. In 2021, the average price rose to $470,000, while rates dropped to 3.1%. Monthly payments jumped to $1,816, a big increase, but still manageable for many. This period was marked by general optimism, fueled by economic stimulus packages and high consumer confidence. Now, in 2025, the average home price has climbed to $585,000, with mortgage rates at 6.12%. Monthly payments have soared to $2,950, a 115% increase in just 5 years. This surge means the dream of owning a home is getting further out of reach for many families. For a lot of families, this means spending more than half of their monthly income just on the mortgage. And we're not talking about luxury homes. These are average houses in suburban areas like Denver, Orlando, or Atlanta. This surge in payments is creating a huge financial burden for the middle class. And when people can't afford to pay, the market starts to feel the effects. Fewer buyers, more homes for sale, falling prices. It's a cycle that feeds itself and demands caution from anyone thinking about investing or buying. The relationship between prices, demand, and supply. Here's where we see the basic laws of economics in action. Supply and demand are like two sides of the balance. From 2020 to 2024, there were way more buyers than sellers. Housing inventories were at historic lows in many cities. It only took days to sell a listed home. This pushed prices up and created the bubble that many experts had warned about. But in 2025, the tide has turned. With fewer buyers able to afford these high mortgage payments and more people trying to sell to get out of debt or escape rising costs, we have an oversupply. This shift completely changes the game for investors and buyers. Interestingly, prices tend to fall more slowly than they rise. That's because many sellers are still anchored to the emotional value of their homes. After all, nobody likes to lose money. But as the market adjusts and buyers gain more bargaining power, those price drops become more real. This dynamic creates opportunities for those who are prepared, but also challenges for those stuck with debt or who don't understand how the market cycle works. Knowing how to read these changes is essential to avoid traps and make the most of the best opportunities. Possible future scenarios. So, where do we go from here? There are two main scenarios for the coming years. In the first, the Federal Reserve quickly cuts interest rates, maybe because of a recession or a sharp drop in inflation. If that happens, mortgage rates would also come down, making it easier for people to buy homes and sparking a new wave of demand. Prices that are falling today could start rising again in just a few months. That would bring a new cycle of appreciation and opportunities for those who act fast. In the second scenario, the Fed takes a more cautious approach, cutting rates slowly as inflation stabilizes. That would create a slower recovery, keeping prices lower for longer. This scenario might be more comfortable for those who want to buy calmly and avoid big market swings. In both cases, there are big opportunities for those paying attention. After all, the best chances to build wealth usually appear when everyone else is scared. The key is not to act on impulse, but with strategy and knowledge. Reflections on personal finance and the economic system. But what does all of this mean for you personally? First, buy a home that truly fits your budget. Don't get swept up just by the listing price. Look at the monthly payment, the fixed costs, and your overall financial security. Many families end up with crushing debt because they buy homes they simply can't afford to maintain. That's a mistake that can cost you dearly, not just financially, but emotionally too. Second, understand that for many people, owning a home can turn into a liability, something that drains your finances instead of growing them. True financial freedom comes from investing in assets that generate income, not in debts that weigh you down. Investing in knowledge, financial education, and multiple income streams can protect you in any crisis. And finally, the economic system is built to profit from people's lack of financial knowledge. Banks, builders, and real estate agents make more when you buy without understanding the risks. So never stop learning and question the rules of the game. Every decision you make should be guided by information and a plan. Today we saw how the real estate market is going through a historic shift. Sellers are outnumbering buyers. Prices are falling and mortgage payments have never been this heavy. But remember, everything can change quickly with interest rates and the global economy. Use this information to make smarter decisions and protect your money. Share this video, comment your thoughts, and don't forget to subscribe. And remember, your financial freedom journey starts now. Click the link in the video description to unlock the ebook packed with investing secrets, mindset shifts, and wealth building strategies.